Hello, and welcome to Talking Development. The World Bank Group recently released its latest commodity markets outlook, with new analysis on how recent developments in the Middle East is affecting global markets. The picture is sobering. The conflict is expected to trigger the largest surge in energy prices since Russia's invasion of Ukraine in 2022. And the impact goes well beyond energy. Food, fertilizer, and key metals are also projected to become more expensive this year. Rising prices have serious implications for growth, development, and job creation, especially in developing countries. To help us unpack what this all means, I'm delighted to welcome Ayhan Kose, our Deputy Chief Economist and Director of the Prospects Group here at the World Bank Group. Ayhan, welcome, and thank you so much for joining me today.
Thank you, Anna.
So let's start with the findings of the report. The recent developments in the Middle East, how are they affecting the commodity markets?
So obviously the energy markets are being affected the most. We are expecting energy prices to be around 24% higher this year. You look at, the oil price, the Brent oil, we think that price is going to be $86. At the beginning of the year, we thought the price is going to be, on average, for the entire year is $60. So this is like a 50% increase.
And what's the highest it's gone so far?
Actually, it went up above, 130.
Yeah.
So, and fertilizers,
Yeah.
very important. Of course, the fertilizer prices have increased sharply.
Yeah.
We are expecting the price to be above basically 30% relative to last year.
Yes.
And there's a certain nitrogen-based fertilizer, urea. We think that the price will be higher by about 60%. So that has huge implications for farmers' ability to afford fertilizers. And that has, of course, implications for the crops this year and the next year, and ultimately price of food and food insecurity. And finally, when you look at, metal prices, they are going to have record levels this year, especially aluminum, because Middle East provides a significant share of aluminum global supply. But you look at, copper, you look at gold, platinum. Across the board, you will see higher prices. And it's because of, AI-related investments, renewable energy projects, all of them using metals, and you see, higher demand. So all in all, across the board, higher prices we will see.
Yeah. As I said, sobering picture. And what does all of this mean for the global economy? And what does it mean for the work we do with developing countries?
So when you think about this type of commodity price shock, of course, you see the first impact in inflation. And we have been getting those news in advanced economies as well as in emerging developing economies. And then there is a huge impact when it comes to economic growth. Let me first talk about inflation. At the beginning of the year, Anna, we thought that inflation in developing economies this year will come down to around 4%. Last year, around 4.5%. Now we think actually the inflation is going to be higher than 5% this year. Food as well as energy, these are big components of the, the consumer basket. And they have huge implications when you compute inflation. And then on the growth side, we thought from last year to this year, growth is going to be stable, around 4%. Now we think for developing economies, growth is going to be around 3.6%. And we think, 65, around 70% of economies, developing economies, will see weaker growth and with repercussions for their ability to invest and, of course, for their ability to create jobs. And in many of these economies, fiscal space is narrow. So whether they are able to react in a way that to mitigate the shock, it has to be seen.
Yeah. It's not like it's been an easy last several years.
Yes.
And again, we're dealing with issues like high inflation and the impact that has, of course, on the most vulnerable and the poor. But also we are much in need of a growing economy to recover from the various setbacks that we've seen since COVID, war and conflict. It's another very, very tough period, I would say. Ayhan, we've been working a lot with preparing ourselves to be better at responding to countries in crisis. how do you see from where you sit and the work you do with your team, what can countries do best to navigate crisis? Because we are again here in a 5-6 year period dealing with difficult times, and we may be there again in a short period of time. What are some of the key things that you think countries need to do to be able to navigate and go through and come out as strong as possible?
Yeah, this is, one crisis after another. We are all becoming students of crisis. They used to take place once in a decade. Now it's like every year. Now, I think the short-term response as well as the medium-term response critical here. In the short term, think about, fiscal response. There, we want them to basically stick to these 3 T's. Timely, targeted, temporary. The response should be there. I mean, policymakers need to respond. It's a major shock with significant implications for the purchasing power of their societies. But at the same time, that response has to be targeting the most vulnerable segments of the society. When they have blanket measures, these measures are more costly and distortive. And ultimately, we want this response to be temporary, because if they basically deploy the fiscal support measures, subsidies, and these measures remain there, they will have even smaller fiscal space going forward. And the second thing is the how they treat their food supply. In the past, we had these types of episodes. Some countries employ export bans. This is like shooting yourself in the foot, because you end up having much higher global price and much higher price at home. So you are ending up basically distorting prices. But beyond these, Anna, every crisis presents an opportunity for policymakers to look at the big picture and think what they are trying to do. When you think about the growth problem, it is always the case that that problem comes with the problem of job creation. And this is a good time for them to think how they are going to approach infrastructure investment in human capital, how they are going to think about regulatory reforms, improving the business climates, and how they are going to find ways to mobilize capital at home and foreign capital. I think that as much as, we have these crises, hopefully policymakers are learning, adjusting, and thinking about, this generations coming to the job market and the need finding jobs.
Listening to you, it does make me realize that we have been gearing up in many ways to respond to some of the areas that need to be focused on. In the short term, we do have a crisis response package that's much stronger than it's ever been, which is good for the short term. But also what you lay out as the framework, which is very much our jobs framework, the 3 pillars of infrastructure investment, business enabling, and then the private capital mobilization part, and making sure we really stay focused on that, because we cannot take our eye off of that. But also the targeting of social assistance must be so much helped by the digital, which is a big sort of flagship initiative that we're driving. And then on the food security side, it makes me think AgriConnect, which is all about increasing productivity in agriculture for greater food security, but also for greater surplus production of food and getting away from subsistence using, again, digital tools. And then, of course, how we're working with countries around the world on energy security, which is so important for the energy volatility, the price volatility, we say. So at some level, I see that we are quite well equipped to help countries, even though we cannot be alone, because it takes so many to play this part. So thank you so much, Ayhan, for helping us unpack, helping us understand, and bringing really light to the key issues that you see, and focusing both on the short term and what countries can do to navigate the crisis. Really appreciate it. As we discussed today, the situation in the Middle East has disrupted the supply of key commodities, driving up the cost of energy, food, fertilizer, and causing uncertainty on timely supply. And as always, the poorest and most vulnerable are the hardest hit. The World Bank Group stands ready to support countries as they manage these impacts and other shocks. The commodity markets outlook is a strong example of the rigorous analysis and policy expertise we offer to countries, especially in times of crisis. Combined with immediate liquidity and a reorientation of parts of our portfolio, we are ready to respond at scale. Our goal is to help countries safeguard hard-won economic progress through strong policies and get back on track toward growth and job creation. That's all for today. Thank you for watching, and I'll see you next time on Talking Development.